Hey everybody, welcome to another edition of Tuesday Talks with Ashley Hanna and Angelo Datseris. Today we're going to be talking about all the things, latest updates, and things you need to know about the real estate industry. If you have any questions or want us to cover a topic, as always, be sure to drop down your information below and or your questions or topics you'd like to see us cover. And we are just going to wait a second for Angelo to hop on. He'll be here any minute, I'm sure of it. Things have definitely been crazy in the real estate market between inventory crunches that are not just here in the Charlotte metro area, but several metro areas around the country are experiencing it in the low rates. It makes it kind of the perfect storm for people wanting to buy a house, sell their house quick. Here's Andy.
Hello.
Hi.
What's going on?
How's it going?
Just crazy as ever.
We're surviving.
I know, right?
Kind of.
Yep.
I'm like, if I just smile, then it's going to be okay.
Right. Yeah. Just gotta take it. Just gotta take it and run with it. But
yeah. So some things that I think we want to talk about today are, what you're seeing with rates right now. And also like inventory issues, multiple offers we're seeing in the marketplace and things like that. So I'll let you go first with the rate situation.
Well, so as of midweek last week, we started to kind of tick up. The 10-year Treasury yield was basically scaring the shit out of 1.2% yield. Okay. And that was the ceiling. That was like, we haven't broke that ceiling since, I don't know, pre-COVID, right at post-COVID, right? So, and if we broke that ceiling, there was a very, very good possibility that it was on going so yield. And it broke it today. So, and it's a bunch of different reasons for that. There's less COVID. Apparently there is less COVID reporting. So I'm not sure if it's reporting or if it's just, the media is not reporting it. There's a strong economic growth in the Eurozone, which does affect our bond market as well. And then the stimulus that they were talking about doing, that the Biden administration was thinking about doing, it's going to be larger than expected.
Really?
So yes.
That must be really new information.
Yeah, as of like today. Well, it's from my my live bond commentary that I try to watch day in and day out. So it's the yields haven't been this high since, like I said, right at post-COVID.
Pre-COVID.
No, as soon as post-COVID happened and things kind of got crazy.
Oh, like
and
right
then,
after, okay.
Correct. And then they dropped. So
okay,
the yields dropped after. So after the COVID happened, they were up there and then they kind of dropped. Okay. So they're on their way. They're on their way back up. And, as I was talking to you about a client, it's so important to be watching it. And you don't know, and this is because I was actually talking to you on the phone about a particular client that I thought, all right, maybe I think we need to go ahead and think about locking. And it happens like that. So if you're not on top of it, I could be, and I was in the file, in the actual pricing, and I was like lock, and it was like unavailable because they shut down the lock desk because they wanted to reprice because of how quickly the yield is kind of rising right now. And so that's what's called an intraday reprice. The rates came out this morning at about 9:45, 10 o'clock. And as I was talking to you on the phone, they repriced for the worst. So, and it's tough. It's a tough, that's probably, honestly, it's probably one of the hardest parts of my job is to time when the perfect time to time a lock is, you know? And so, but what I've seen this go on for, gosh, the last 8 months, a year, where it's just like, it goes up and then it goes down and it goes up and it goes down. And it's, you know, you want to have a knee-jerk reaction. You want to just lock. And, you know, sometimes they'll settle back off, and a lot of times they have. But, you know, I don't, you know, I was listening to a Barry Habib webinar, who is like the man when it comes to mortgage-backed securities, interest rates, and things like that, right? And he was expecting, and he's right. He was the one that mentioned the 1.2% yield ceiling. He said if it breaks that, it's gonna rise, which it did. You know, and it could rise to this next ceiling, which it did. But he's also thinking that there is going to be some leveling off, and rates will be maybe getting a little bit better later on this year. But you know what, man? It's all fear and speculation on the news. All you can do is really just try your best with your clients, you know, and just try to advise them on the best, because they're either going to pay a little bit higher rate, or they're going to pay to extend the rate for a longer period of time. So it's in essence, it's a wash, you know?
Yeah, that's a good point, Angelo. You know, okay, so like you said, we have seen the last 8 months where you'll have days, or, you know, several days like this, and then you'll see everything kind of
settle back off.
Right.
Yeah.
So do you think that's going to happen or not, because of what you just said about it bypassing the rate ceiling, or that
ceiling, you know?
Yeah.
You know, that's a good question. Short term, I think, you know, if you're, you know, 20 to 30 days out, short term, you should lock. Long term, I don't think you should. And that's been my stance for, you know, a long time, and that's going to continue to be my stance. Because we're just seeing a lot of, like, quick. When it happens quick like this, it's, you know, fear and speculation from the market. Oh, hey, John, Boyd sent this one of my clients. Hey, thanks for joining. And thanks everybody else for joining. Tracy Honeika and No Full Life. So some hope. So, and especially with a 3-day weekend, and I had a refi that I basically locked on Friday, because going into a long weekend like this, and things kind of happen in overseas, like, because, you know, they don't have President's Day over in China or in Europe,
right?
You know,
right.
So they're trading these days, and President's Day, the bond market's shut down, the banks are closed, you know, so a lot of lenders, you know, they kind of brace for the worst going into a long weekend sometimes, so they kind of tick up. Because on Tuesday morning, as this morning, as soon as I read the news headlines, I was reading over the weekend, but they were saying, like, the futures, the stock futures were up, you know, and it's supposed to be a great open, another record-breaking week in the stock market, which is bad for bonds.
Right.
Because
that's what I always tell people. If it's good for the stock market, it's bad for bonds, aka mortgage rates.
So people were selling bonds this morning to get into the potential, you know, bull market stocks, you know, the gains to go after those gains in the stock market, because those are quicker gains than it's going to be for your, you know, your treasuries or your bonds.
Yeah. It's just, you know, I think a lot of, obviously, what is driving buyer demand in the marketplace is obviously, right, the low rates. They're still staying low, right? Even though you've seen them tick up. What are you seeing like
Still,
this?
I mean, 3% and for great, great credit, good money down, 3% and less. I would say 3% APR because that's technically how I have to say it. Um, but I mean, even if rates were 3.75, that is a phenomenal rate. It doesn't.
Yeah.
It's just, and now we're so like fixated on like rates in the twos, right? And if gosh, people are gonna freak out. Oh my God, rates 4%. I mean, I've lived through it before. Rates were crazy, have been crazy before in my day, and so it's just cyclical. It's going to go up and down.
Well, yeah, that's the nature of the beast. And I think too, why people are very sensitive to it, at least when they're starting the buyer journey and, essentially until you're under contract and you lock it, is because, yes, with the rates, how they have been, a lot of people are buying and they're kind of on the edge of that. They can afford what they can afford because of whatever rate that they're
Correct.
getting or
Yeah.
they're estimating to get. So I think, that's what drives a lot of it. But we've been saying it, Angelo. We literally, I think we say this every week. Rates are going to go up because they are at record lows. Like it just doesn't stay like that.
100% correct.
And I think that we're going to see when rates adjust, right? When they go up as they are, right? Because the economy is going to get better.
Correct.
Naturally, as we come out of COVID, we're going to see some price corrections as far as like sales price goes. Yes, sales prices are up year over year.
Especially this last 2 years, it's just been bonkers.
Yeah. So sellers are, personally, I have been, I had 2 listings in the last, 10 days, and we had over 5 offers on both of them within less than 24 hours.
It's crazy.
And it's just, I don't, yes, sellers love it, and I love it for my sellers. It's hard for buyers to compete. And I don't think it's in the best interest of consumers out there. We need a little bit of a correction. That's not going to help like
to slow this down a little bit so there's not 14 people fist fighting in the park in the driveway of a home that's for sale.
That's like pretty much where we're at. I feel like.
Yeah. It's crazy. It's like instead of road rage, it's like house rage.
Yes. People are like locking doors and, taking like a whole day's worth of showing appointments. And it's great for sellers, but I say this to my sellers. I'm like, listen, if you have a second house somewhere and you don't have to like move somewhere else, you're not gonna be homeless, like great, let's roll. But if you're trying to sell and buy, like we got to talk because what are you going to buy? We don't know.
I know every one of the deals that we're working on and the other, deals that I have that are purchases, everyone is in the same boat. Like I'm not listing my house until I know I have another house to go into. Like I'm not, because their house is going to be under contract in less than a week, probably even a day or two. And then they're not going to find a house. Every single one of my buyers, and I've never experienced that ever.
Well, and the other thing too is if you are a buyer and you are selling your house, guess what? If you have a contingent offer, meaning your financing, right, on your new house is contingent on you selling your existing house, you're not going to get it, at least in the last couple weeks here in the Charlotte metro area, you ain't going to get squat with a contingent offer.
Right.
Sorry.
It's just going to be like, oh, contingent offer. Bye-bye, Nick.
Right. See that out the window.
Yeah.
It is, it's just a different, I obviously look to you for a lot of things. And plus I'm reading historical information because I haven't personally experienced it. But I think in the last 4 years in Charlotte, I've never seen it like this. That's, you know,
Mm-mm.
not a long period of time, but still, you know, it makes it difficult for buyers, and sellers are getting greedy. And I'm like, yo, it's not going to appraise. And that's like, let's not be greedy, you know? Like, I hear ya, but like, I mean, there's no way that that house that's really worth like 300 is ever going to be worth $500,000. Like, I mean, let's get on the same page here.
Right. Right.
But
But you know, sellers, they want to pay top, they want to sell their house for top dollar. But if they were
of course
trying to
they
buy
do.
that same house, they wouldn't offer top dollar, you know? So it's funny how that works.
Yeah, I
But hey,
know.
we're all like that, you know?
Right. I mean, I quickly see, it's so funny when I have a client and you know, we've listed their house or whatever, gone through it all on the list side, and now we're doing it on the buy side for them to buy a house, and I see them so quickly change their tune, like, well, I'm not paying $1 over this, and I should be getting that. And then I'm like, okay, I hear you, but remember when you were the listing agent and what you said about these buyers. So like,
Right.
it's just
Yeah.
like perspective. And when you have a market like this, I feel like it is my duty as a professional in the real estate industry to keep expectations in line. Like, I hear you, and I'm going to do what you advise me to do.
Right.
But I'm going to make sure you have the proper information so that you can manage what your expectations are, and really come back down to earth a little bit.
Right. Exactly. Yeah. I mean, I don't, you know, you're more on the, not to switch gears here, but you're more on the, you know, the real estate side of it too. I mean, the amount of homes that's just the inventory. I mean, is there ever going to be an end in sight to this? I guess maybe once the rates kind of, you know, buck up a good bit, when it starts, you know, slowing down, maybe there'll be some more. I guess maybe not more homes on the market, but just
Less
less
competition,
competition for those homes.
which
Yeah.
I think will help. You know, I think part of the problem too, and you know, I was blown away by this in the last few weeks, all the new construction, you know, I think that new construction is trying as best as they can to crank out as many homes as they can as quickly as possible. But you have a few problems, right? One of them is the prices of lumber are like record high right now. So
Yeah.
that is a challenge for builders right now, to price things appropriately, because they're, you know, when they start a house and they're buying supplies for that build, that house isn't going to close, you know, for like usually at least 90 plus days.
Right.
So
4 to 6 months, maybe 4 to 8 months,
yeah,
depending. Yeah.
so it's hard to price things, and they can't build them fast enough. Most new home communities in the Charlotte metro area right now have wait lists for lots. I mean, that meaning they have no existing inventory that's ready to move in. The lots that have been released by the builder have been, you know, they have like 8 people that basically want that lot. So they have a wait list every time they go to release a lot, and it goes down the list.
That's nuts.
Isn't that insane?
That's nuts.
And it's almost every community within the Charlotte metro area that I am aware of. It's
Right.
probably not every single one, but it is most of
That's
them.
most of them. Yeah. Yeah. I mean, new construction, you know, I mean, they have to keep building homes. I hate how the, you know, new construction, just builders, they like to bully. They like to bully around the clients when it comes to preferred lenders and, you know, their preferred attorneys and things like that. So whatever, you can't win
I
them all.
know. I really try to educate my buyer clients in those situations with the new builders, because you know, and Angela, sometimes you can't compete, and that,
No,
and that's, I don't think this isn't in the best interest of the consumer, in my opinion.
it's not.
That you are essentially forcing them into using whatever lenders, title company, attorneys, blah blah blah, because the credits to the buyers are so huge, they can't afford anything otherwise.
Right. Or just, it's the immediate gratification of not having to come to the table with, 5 or 6 grand when if the builder's going to pay for it or the lender's going to pay for it. It's crazy. It really is.
I just think that it is always in the consumer's best interest to have options, right? Like that is like economics, that is capitalism, blah, blah, blah. But when you limit those choices by providing these huge incentives, yes, on paper, that is great for the consumer. But remember that client we had last year where they ended up going with the builder rep and then you ended up
refine.
Yeah, because what had happened?
Their rate was higher, but they got those incentives. And then I came in behind and did a refi, in the second month. In his first or second month, getting him the rate that I initially quoted him. And then he ended up selling the house. And when that happens within 6 months, I have to pay, it's called an EPO. It's called an early payoff. So if it's within 6 months, I have to pay any commissions that I received on that transaction. I have to pay it back to the lender. So that one was a losing deal from the get-go.
Really not ideal.
That was a loss leader for me. Yeah. So I worked on it twice, got paid, and I paid it back. So, yeah.
That's something too, like people need to sit tight for a minute, right? Like it is not good to be in a house for less than 6 months.
No.
I mean, you are throwing money out the window. I mean, if you have millions of dollars and you can, like, listen, let's do it, right? But if not, it is and especially for you, I had no idea that that's how that worked until we talked about it in that situation.
Mm-hmm. Yep. I could structure it, some different ways to maybe offset that, but at the time he had no plans. And usually if I know that there's some sort of plans of, not keeping it for a very long time, then I structure it differently, you know? But it was, and I've only had a couple, knock on courts here. I've only had a couple EPOs in my day. But so, I mean, I really try to figure out, hey, what's your long-term play with this thing? Is this, are you steadily looking for a new job to get maybe shipped somewhere else and have to sell this home? And, but hey, you never know.
Yeah. Well, and that's, again, the benefit of working with you, right? Because you're going to get to know their why they're selling, why they're buying, etc., so that you can structure the absolute best deal for that situation that they're trying to achieve.
Right.
So when your agents and your lenders are asking you these questions, and this is why they're not just being nosy. And I hope that your agents and lenders are asking you these questions because it's important on how to make sure that you're getting the best deal.
Yeah, 100%.
Mic drop.
Yeah, no, very true points we're making here for sure.
So I feel what else?
Other than that, I mean, everything is really basically behind us when it comes to the election and stuff like that. So now it's really just going to be the economic indicators for rates. Yeah. So, let's hope they settle back off. I have a couple that are closing in like 2 months, and I'm gonna have to sit down and figure out what I'm gonna do with those. So
I'm like, oh God.
Yeah. So, anyways, it'll be all right.
Yeah, it'll be fine. It'll be fine. It always is in the end.
Yeah.
But that's why you want experts like us to help you.
That's right.
If you need somebody in another state that we're not licensed in, we can hook you up there too.
It sure can.
So
for sure.
Thank y'all so much for tuning in today.
Yeah, thanks.
And it is like this time of year. I mean, I think it started a little bit sooner for me, at least, as far as the busy time, the spring.
Yeah. Right out of the gate.
So that's kind of what happened last week. We are going to minimize those situations as much as possible, but we are in this business day in and day out. So our clients always come first.
Right.
And if y'all have a topic you want us to talk about next
Yeah,
week,
please leave us, shoot us a note, comment, send us a message, anything, about the industry, the real estate, mortgage, whatever it is. We'll try to give you the best possible advice that we can give. But thank you guys for joining. Rock and roll. Until next week.
We appreciate it. We'll see y'all next week. Thank you so much.
Bye-bye.
Bye.